All right, welcome everyone to our webinar. It's great to have everyone with us today. And today we also have James, our analyst, with us for the webinar.
Hey guys, good to be here today.
And as usual, we'll do a Q&A at the end of the webinar. So there should be a box by the right side of the video where you can ask any questions. So please put in your questions there. A lot of things happened in the crypto market for the last month. Let's start with some of the news. One of the news was that ICE, the owner of New York Stock Exchange, announced a new crypto platform. They're going to launch a product for institutions and retail investors to trade Bitcoin. And they call it physical Bitcoin. It's not going to be any margin trading. It's all going to be backed by physical Bitcoin, and they're going to call the platform Backed. And they did this in cooperation with Starbucks, BCG, and Microsoft, and they aim to launch in November of this year. ICE and New York Stock Exchange is probably one of the most trusted names in finance, so this was really big news, I think. And I don't think it's reflected in the market yet. Probably the biggest news so far in the crypto markets. Would you agree, James?
Yeah, I mean, thinking about 3 or 4 years ago, this kind of news would just never have happened. The New York Stock Exchange is creating a crypto platform. And I think we're seeing this in all kinds of places in the crypto market at the moment. Traditional players and big enterprises are creating platforms that make investment much easier. And especially into the Bitcoin market, but throughout the crypto ecosystem. Switzerland's stock market earlier this year, stock exchange rather, did a similar thing and is creating a crypto platform. So we're seeing this all around the world, but the New York Stock Exchange was fantastic news. And I think, Henrik, you would agree that the fundamentals of the market are looking really good.
Yeah, I think news like that is just a couple of years ago it was unthinkable that New York Stock Exchange and ICE would back something like this together with Starbucks, BCG, and Microsoft. These are really mainstream names. Yeah,
I would I would add to the fundamental news. It's really good. Goldman Sachs earlier this month said that they were developing a custody solution for Bitcoin. This comes after they said they would be creating a trading platform for their clients in Bitcoin. Likewise, BlackRock, the largest asset manager in the world, said that they've developed a working group to look into cryptocurrencies. So these major institutional players are not only looking at the space now, they're creating platforms for investment. So for us, that's really heartening. But interestingly, we kind of are, from our perspective of the markets, is that all this fundamental news is not being reflected directly in the prices. It's great if you want to invest because prices are still depressed comparatively to the fundamental news, but it is an interesting thing to note.
Yeah, and actually the market went down in August, and I think it was on the back of the news that the SEC is not going to go forward with the Winklevoss ETF application. However, I think that was probably should have been expected. They have been delaying that decision for some time. It was based on one exchange, Gemini, which is owned by Winklevoss, but more interestingly, I think we will have new applications already in the process, and I think listening to the experts in the industry, I think it's likely that we will see an ETF for the first time within 6 months or so. There is one application in particular from CBOE that SEC will need to make a decision on before March of next year. So I think it's likely that a positive decision will happen in a quite short time frame, which will be, I think, another piece of positive news. We will have actually a few decisions with regards to ETFs coming up over the coming month or so. I think there will be one decision tomorrow. That will probably not be positive. I think the most interesting application with the SEC right now, it's again from CBOE, and SEC will make a decision by the end of September on that ETF application. They might delay it, but I think that one will eventually be approved, which will be pretty big news for for the crypto investment space. That will open the doors for retail and institutional investors alike.
My gauge of it is that the ETF decision, or people in the crypto market consider the ETF decision to be simply a matter of time until one is approved. The Winkelwasses have spent a lot of time trying to get theirs through. They've done it twice and been rejected, but a commissioner from the SEC famously dissented for the decision of the Winklevoss ETF, and she wrote a very interesting piece, which was in one of our newsletters about that. I think in terms of the fundamentally good news that's happening in crypto, we can put it in the financial bucket, which we just discussed, but also in terms of the technology and the technological developments. There have been some really great things that have happened recently. Zcash came out with a sapling upgrade this month, which is a very big deal for that, and that is one of our investments. So we're very pleased about that. Anything else you would comment on?
Yeah, we'll get into more of the applications and fundamental news, I think, but maybe I'll sum up the last month. So the crypto market was quite negative over July. We managed to get a positive return in the month of July by 2.15% net of all fees, which we are pretty happy with, despite the negative market. So I think that's really good. This is probably the time to invest before these platforms are rolling out from the likes of New York Stock Exchange, ICE. Nomura is working on a custody solution as well, ETF decision. So this is probably the time to invest. The crypto market has been going down for some time now, but the fundamental news has been pretty strong. I think also our fund performance has been maybe a bit more positive than many others, because our ICO allocation has been remarkably smaller than many other funds. We said from the beginning that our ICO allocation would be capped at some 30% of the fund. We always saw the ICO market as the very high risk space in the crypto ecosystem, and probably many players were overexposed to the ICO market. There was a clear hype around ICOs during last year in particular. So that's probably helped us as well. We've been super busy during this time period. I was just at Risk Australia at the conference. All the mainstream financial conferences has a crypto section these days. I chair the table on cryptocurrencies there. I'm doing Dan blockchain panel in a couple of weeks. The APEC blockchain conference in Melbourne as well. I'm going to Sydney in the beginning of September for the crypto and ICO convention. So hopefully we can connect with many of you in those places.
Yeah, and on that note, I would recommend anybody listening to look at our events page on our website. Henrik's going around Australia educating and speaking at many events. This month I'm speaking at the Digital Innovation Summit. This Saturday I'm also heading along to the Blockchain Ecology Conference in Melbourne, and in early September I'm going to the Digital Innovation Summit in Bendigo. So we're very keen to educate the public about crypto and blockchain and share our knowledge. So please come along to any of the events that we're speaking at and introduce yourselves.
Yeah, and we probably should have started this webinar by saying what we actually do. We run a fund called Apollo Capital, and it's an actively managed crypto fund. We invest in the crypto asset ecosystem, everything from liquid assets like Bitcoin, Ethereum to early seed rounds in interesting projects around the world, really. So that's what we do. We're open to wholesale investors, and you can find more information about or found on our website, which is apollocap.io. I'm Henrik, I'm the CIO of the fund, and James is one of our analysts working with our investments. So let's talk a little bit about the future web and how crypto assets fits into the future of the internet, really, and what is Web 3.0. So if you think about the web, it started off what we call Web 1.0, which was a very static kind of information exchange. It then moved into what we call Web 2.0, where we're at the end tail, we believe, of Web 2.0 currently. That's the social web, where we have companies like Facebook, Twitter, Google, etc. Anyone can contribute information, but it's really dominated by some really big players. We think we're moving into a more decentralized web based on open protocols. If you think about someone developing an app, for example, for the Apple App Store, you're really at the mercy of the rules of that app store. We believe we are moving to a world where innovation is open and is built on open blockchain, open protocols, and that decentralization is really driven by blockchain technology, and something like Ethereum is an open protocol where anyone can build on top of that protocol. So I think that's really, really powerful. And another view to look at it is that the users become the stakeholders in this new ecosystem. So the users and the investors really become one and the same, and everyone has a stake in the protocol, and no one can change the rules of that protocol, which is really powerful. And you can build strong network effect in this new decentralized web. I don't know if you have anything to add.
Yeah, I think a really good starting point to think of Web 3.0 is to consider how young the internet is. If it was human, it wouldn't even be middle-aged. And in Web 1.0, as Henrik said, it was the static era, it was the read-only web, where you would go onto websites like a news website and read an article, but you couldn't interact in any kind of substantial way. The significant thing that happened in Web 1.0 was the establishment of really important, highly technical protocols that enabled websites to be built and communicate with each other. Web 2.0 we know very well, e-commerce, social, that kind of thing. Web 3.0 we kind of think of as the crypto-enabled web. But I think something that I would mention is that a lot of people think of Web 3.0 as decentralizing the current business models of Web 2.0. We actually think of this a bit differently. For us, crypto is only important if, in terms of creating censorship-resistant, permissionless, and trustless protocols. So something that doesn't link up to those three criteria doesn't need a blockchain. So we can envisage a world where actually some parts of the Web 2.0 economy, say Instagram, doesn't need to be censorship resistant. It doesn't need to be permissionless. So perhaps that'll actually remain in kind of the Web 2 world. But what we can see is that major industries that are currently in the physical world moving to the virtual world. And things like financial services actually might require a kind of a censorship-resistant, permissionless, and trustless protocol. So we actually think that Web 3.0 will decentralize key industries in the traditional world and end up being vastly larger in size, especially if you include the tokenization of traditional assets like real estate, than the Web 2 world. So that's kind of our perspective on the Web 1, 2, 3 story.
Yeah, I mean, that's a really important point. We still today have Web 1.0 services. We still have the New York Times today in the current web. We will in the future most likely have services like Facebook and Twitter, but we are building a much larger web. We'll capture much more value. We will have things like digital assets. We will have smart contracts, disintermediate. Many current industries are working on top of these blockchains, and we'll have tokenized security. So we'll have a vast larger web, and the Web 3.0 will capture a lot more value than the current web. So we're not just transforming the current web; we are building a much larger web that will contain the pieces from Web 1.0 and 2.0 within it. I think that's a really important point.
Often people think that the previous iterations of the web disappear. But I think a better way of thinking about it is that the web that replaces it actually is just much larger, and but it still remains easy to glimpse previous iterations of the web, like the New York Times.
We've been thinking a little bit about the use cases in this new web. Digital assets is one, money is one, Bitcoin is a type of money. We will have digital goods as well that are unique and that we own in a digital world. That's really powerful. Tokenized securities, we've written quite a lot about. We can tokenize real estate and other securities. And then we have smart contracts. And thinking about smart contracts, we believe at Apollo that one of the low-hanging fruit for smart contracts will be financial products. I recently wrote an article called Rebuilding the Financial System from the Ground Up, describing how the future could, we can rebuild the financial system using smart contracts. We no longer have to trust financial institutions to borrow, to do lending, to do all kind of derivatives, CDFs. Actually, Nick Szabo just this week, I think, put out a tweet saying how smart contracts will disrupt these kind of financial money markets, CDFs and derivatives. And Nick Szabo, as you might know, was the inventor of smart contracts 25 years ago. And some of the things we see is lending, borrowing markets. We recently partnered with Compound. James, you're doing an interview with them tomorrow, I believe, so make sure to check that out once we post it. And they will provide lending and borrowing initially of crypto assets, which will be really interesting. And I think they're just launching in a month or so. We have companies like DYDX that will create like ETFs that are crypto assets. You can go long and short any type of crypto assets with just one token that can represent a long or a short position in another crypto assets. That will be really powerful. We believe stable coins will be core to this new financial ecosystem. If you marry stable coins with smart contracts, you can do all kind of interesting lending and borrowing. And once we tokenize real estate, we can do lending and borrowing with real estate as collateral. And James, I know you've been experimenting with all these services, Dharma, MakerDAO, really trying them out. And what's your experience?
They still seem quite primitive, these decentralized applications, but they are quite remarkable what you can do today using Ethereum financial services. So for an example is MakerDAO, where you put up your own Ethereum, but then you can actually draw out a stable coin called DAI, and you can use that to buy more assets. So you're essentially creating a lending position, but against yourself. So the interest rate on that is 0.5%. So it's the best loan you'll ever get. And this is precisely because you disintermediate a financial institution. You don't need to go through a bank. You just lock up collateral yourself. And because the protocol actually determines the interest rates and the governance fees and whatever else, you can pull out a stable coin and you can use that for further investment. So I think this is a glimpse of a radically different financial ecosystem, and I think they shouldn't be thought of as just kind of a random thing that's going on the side in the crypto world, but actually something much larger that'll end up changing finance. Dharma is a peer-to-peer lending protocol, but Compound is another project that we partnered with to supply some initial liquidity to, and please tune into the interview tomorrow.
Yeah, and maybe as a closing word before we go to Q&A, make sure to put all your questions in the box. But our investment thesis is really based on that crypto assets will fuel these blockchains that will decentralize the web, and the value creation will be centered around moneyness and governance. And we believe there will be a limited number of core blockchain protocols that will be the long-term winners in this space. And that will be blockchains around money, around smart contract platforms, around interoperability, these kind of core functions. We will have a middle layer with maybe thousands of different protocols around file storage, stable cryptocurrencies, oracles, these building blocks in the new ecosystem. And then we will have another layer on top of that with smart contracts interacting with these, built on top of the blockchains and interacting with these different building blocks. And on top of that, we will have the dApps, the applications. We will have millions of applications. And we've been thinking a lot of where crypto assets fits in, and that's really in the we believe in the kind of layer one infrastructure protocols and in the middleware, and that's where we're investing in our fund. And we are building a diversified portfolio with the most promising technology and the projects that can build the networks effects. At the end of the day, it's all about the network effects. These are open source protocols, but they will kind of optimize on different variables. So there will be room for more than one winner, but a limited number of long-term winners, because the network effect will be strong, but at the same time you will optimize on different variables like throughput, privacy, and decentralization, things like that. But important point, in the decentralized application layer and the smart contract layer, you will probably not need crypto assets to fund these projects. They will probably be funded by traditional equity. Compound, I think, is a perfect example. They have equity behind them. They're building a decentralized lending and borrowing market, interacting with smart contracts on top of Ethereum. Ethereum is backed by a crypto asset called Ether, but the application itself is backed by equity. So many of the ICOs we see today, they're creating a token that might not be needed. They can use something like Bitcoin or Ether if they want to create a payment system, for example, for a service. We don't have to create kind of the basic money protocol again. I think that's something everyone should keep in mind, trying to innovate and create interesting projects in this space. Anything you'd like to add to that?
Yeah, I just think it's really important to realize that in this new economy, equity is only a small amount of the value created, and that's in the top layer, which is a very thin layer. The application layer is actually quite thin. Obviously, in the Web 2 economy with Facebook and these other companies, the application layer is very fat, and most of the value is created through equity in those companies. But we're actually going to see value creation further down the stack. And that value creation is going to be within tokens that fuel the protocols. It's not going to be so much in the equity of the thin, decentralized, and very competitive application layer.
That's right. All right, with that, we'll go to some Q&A. Hopefully you asked us a lot of questions. Let's have a look. So we got one question. So would Web 3.0 work in China?
I mean,
yeah, one important point to point out here is that crypto assets are fully legal in China. You can trade and interact with blockchains and crypto assets in China. ICOs was banned in China in August, September of last year. We're hearing that ICO market is slowly coming back in China. But crypto assets have been legal this whole time, and China is really innovative when it comes to blockchain and the cryptocurrency space. If you look at all the patents in the blockchain world during last year, half of them came from China. So I believe Web 3.0 will be available in China.
But I mean, the first thing I would say is that the Web3 economy is by definition transnational. So it's not something that is defined or exclusively related to one country. It's everywhere. It's on the internet. So I don't think any country will be able to miss out on this in this kind of revolution. But currently, China has one of the richest crypto ecosystems of any country. They have a very active investment culture, and a lot of really interesting projects are happening there. I think there's probably also a troubling aspect to some of the crypto-related projects in China. The government is particularly keen on using blockchain, partly because if used by a central authority, you can actually see the transactions of everyone who's using that ledger, like on Bitcoin. But if it's used by a government, obviously that can increase the control of the party in charge. So I think that the Chinese ecosystem is very interesting.
And the Chinese government might be working on their own cryptocurrency as well. And some people speculate that they eventually will ban cash in China, just for this reason, as you mentioned.
Yeah.
Also worth mentioning that we invested in a protocol called Orchid that is currently under development that will create the sense
As you over the last 30 to 60 days. Henrik, I think you can probably answer that best.
So, what has surprised us the most? Bitcoin has gone up in dominance. It's at 52-53% of the overall market. I think that has surprised most of the people. A lot of people said in the beginning of the year that Bitcoin's dominance would continue to decline. That has not happened. What else has surprised us?
I think what I would say is that the current movements actually haven't surprised us too much. I mean, we are big believers in Bitcoin, and Bitcoin's dominance has increased. What has surprised me most is that the vast majority of really quite useless crypto assets out there are still have a substantial market cap. I think we will see that change very, very soon. But I think on the whole, the market has been allocating resources to the protocols of more quality, like Bitcoin. And I think also Ethereum's recent downturn is also is also expected. We decreased our exposure to Ethereum recently, and I think that's with the tapering off of the ICO market, that was to be expected. So I think the market is moving relatively logically at the moment.
Yeah, hopefully we'll see a continued move towards high quality projects. As an example, Coinbase in the US announced that they're going to list a number of crypto assets, or looking into listing a number of crypto assets, and many of them were already in our portfolio, which I think is a proof that we have built a high quality portfolio of crypto assets. They just listed Ethereum Classic, something we had in our portfolio. It had a really strong performance after Coinbase announced that they're listing them. We took the opportunity to exit that position during the last few weeks.
Yeah. Well, it's about time now, but I would just say that please follow our blog on either Medium or on our website. We come out with content on a weekly basis that describes the current thinking from the Apollo team. I'm also, as previously mentioned, interviewing a really exciting team called Compound. We provided the initial liquidity to their protocol. They're a partner of ours. I'm interviewing the founder and CEO tomorrow. So that'll be up on our YouTube channel. So also check out our YouTube and our Twitter page. Henrik is quite active on Twitter, so am I, and LinkedIn. So there are many channels to follow us on, and we really hope to connect with you via one of them or in person at one of the many events we're at.
Yeah, I think that sums it up. And thank you so much for tuning in, and we'll be back next month with another webinar. So see you soon.
Great. Thank you.
Thank you.